Hello and welcome to this week's Market Talk. Joining us this week we have Rob Bywell, who is the CEO of Airedale Group, and we have Simon Lohse, who is the MD of Rationale UK. Thank you very much, guys.
Morning.
Morning.
Excellent. I think we'll start off with you, Rob. The past 4 months have been incredibly tough for the entire industry. So when did you get a feel for just how difficult things would be?
It's difficult to kind of think back and actually recall when did the penny drop. I remember in February talking to people actually outside the industry, particularly in the professional services and businesses that have, I think typically they had operations in other parts of the world, and so they were seeing things obviously that we weren't seeing things here in the UK. So, and that kind of conversation seemed to start to happen in February, but I still think at that point there was a view in the UK that it would just blow over, or it wouldn't be that serious. I think that changed dramatically in March, and I think as we went through March, it was almost a daily event where some news would land, and it just seemed to be getting increasingly more difficult and more challenging. And then obviously the UK government started to adapt their policy and the structure of how they saw various markets operating. And then on March the 26th, of course, Boris closed the hospitality industry. And if you go back probably 2 weeks before there, you could see, particularly in our service business, where we were very busy up until probably beginning of March. And then almost on a daily basis, we just started to see the number of jobs start to reduce quite significantly till March the 26th. So that was obviously the point at which we went into lockdown.
Yeah, because Airedale operates in all sorts of sectors across the industry. So what was the lockdown period like for you guys?
Going into it, because we probably had that runway with service and the visibility within service, we kind of got a sense of what was coming. So we quickly formulated a plan on what we believed we needed to do. Within the service operation, the job volumes dropped almost to the level that we see kind of out of hours. So we already had a kind of playbook that was there, our out of hours playbook that we could go to really to start to look at saying, well, what's the new baseline like, and how do we make sure that we keep ourselves open? So we were responding to customers that are still open, because we still have a number of customers and had over that period customers that were open. But obviously the numbers were very different. So essentially we put that playbook into place, and that went through pretty quickly. On the project side, actually, we didn't see initially a massive drop down. So we deal, as you say, in a number of different sectors. There were various sectors that were still very much open for business. So we do a lot, obviously, in the building trade and the main contractors. They stayed open through all of this period, and therefore we had probably about 50% of our staff still working on the project side of things through that period. So we're actually reasonably busy. Obviously, the national account stuff, we were various stages. We're on site with a number of things. We have an order book, and all of that pretty much ground to a halt. I have to say though, we've not been in a position where anyone has pulled those jobs that were in the order book. All of our clients seem to be looking at delivering those jobs, and that's where we're backing in.
That's positive.
Okay, and Simon, just bringing the conversation to you. Prior to the lockdown, you were gearing up to a very significant product launch. There was a lot of effort being put into preparing for that. Obviously, you went ahead with that product launch during the lockdown. How was that? Because that was very much a kind of a company first for you.
Yes, it was, and we were looking forward to a big launch event. We had around about 400 to 500 people confirmed to come to that launch event, and we were quite excited by it, obviously. we had to go ahead with the launch event. You'll appreciate with that planning and the production behind that, and the production planning to swap to the new product, it was time critical. So we converted it to the online launch, and actually it worked really well. We had some great feedback from our business partners, our dealers, our service partners, and end users, and particularly key accounts. I think one of the advantages, of course, was people had time to attend the online events by default, and that meant we probably reached a wider audience than we would have done with a physical event. And it also meant that people could dip in and out. So it proved very successful, particularly the dealer training events that we ran during the lockdown for our deal partners. They were really well attended. We reached probably a much wider number of the employees at the dealers' sites, whether it's project managers, salespeople, service people, than we would have done otherwise. So,
okay, right, interesting.
Overall, a successful time.
Yeah. So it was the iCombi and the iVario that you launched during that period. You know, when you're normally launching a new product, you would then straight away, from that expect to see some buy-in and some purchasing and so on. Given the conditions that we've gone straight into, what has been the response to those new products hitting the market?
Well, actually, we've seen quite a robust recovery. So I think, like most people, it's interesting listening to Rob there, because what we were seeing in February, prior to the lockdown, was a surge in project work. And I think most people in our industry were seeing a lot of projects across all market segments, both public and private sector. And then obviously March curtailed that very quickly, particularly by the third week of March we were in lockdown. I think April was just dead. We only saw around about 20% of our normal order volumes, and that was basically going into public sector, particularly healthcare, some education. But then we've seen in May and June and now into July quite a robust recovery. So we're back up around 70-ish% already of the daily order intake. And again, that's fair, with the exception probably of casual dining. Most market segments are starting to order again. So that's probably a faster recovery than we were expecting.
That's brilliant. We love some good news. So, I mean, how have you worked with your dealers and your end users to maintain these relationships throughout the crisis and ensure that you've bounced back at least somewhat so quickly?
Well, we were very, very fortunate in one way, in that because we were doing the online launch, we had all the internal training to do for our salespeople and our service people. We had the training to do for our dealer partners, and to staff the product launch, which really meant that we took the decision not to put anybody on furlough. And as a result of that, we were able to stay in contact with both end user customers, key account people, and also all our deal partners and service partners throughout that time. So we were able to support and work where that was required and where that was necessary during that time. Stay in contact, and we started to run online Cook Live demonstrations. We started to do virtual visits as well as physical visits for our sales process. And overall, I think that was fairly well received in the market, which meant that we were in a good position once things started to release and started to open up again to maintain that contact. And I think it's fair to say, cash flow was for all businesses was a key issue, and because we were in contact, we were able to work with our dealers, and we pride ourselves on having a strong strategic partnership with our dealers, and we were able to work with them and put in payment plans where that was necessary on a case-by-case individual basis. So we've managed to continue to work with our dealers and support them where we can through that period as well.
Excellent stuff. Okay, so coming back to Rob now, so for the other end of the supply chain, I mean, Airedale, you guys work with many national account businesses, high-profile chains, etc. And as you said, like a lot of them kind of are putting projects on hold, or some of them might even be reducing the size of their estates in the wake of this whole COVID-19 crisis. So how do you think all of this will impact their kitchen plans and project aspirations once the dust kind of settles on this crisis period?
Look, I think we talk about hospitality. I think it's a very resilient market. I think people that maybe not in it as much have quite a binary view of hospitality as a general sector, and therefore a general challenge. I mean, we have found that actually, if you go back to 2017, middle of 2017, it seems a long time ago now, but and you guys were reporting this, there were some real structural challenges in hospitality back then. There was Brexit, there was cost pressures, and we, at the time, we mapped out the hospitality sector and in almost the entire sector, and determined from that mapping out, because there's a lot of information you can get from public sources, we determined from that process where we thought the opportunities were. And I think people kind of make the mistake of just saying that hospitality is this or hospitality is that. Simon said, there is an area around casual dining, but there are lots of other areas within hospitality that over this period of time, even though people think that hospitality has been under challenge, and there has been challenges, there's areas of the marketplace that have been growing 20% year on year, and that's massive growth. If you look at something, take for example the kind of eat-in market now, that's a $13 billion industry globally. That is forecast to grow to $365 billion in the next 10 years. Now that's massive growth. And so when you look at hospitality, there are nuances within it. I don't doubt for a second that there are some challenges within certain areas of hospitality, and some more than others. But I think, as I said, I think it's a very resilient sector. I think with that comes opportunity. Typically, it's also a very entrepreneurial industry. People will find opportunities out of problems. Businesses will iterate and pivot from what they are doing and how they are working at the moment into a different type of operation or a different type of delivery. And we've seen that over the last 2 or 3 years. The kind of whole, and Simon will have some insights on this, the whole kind of land grab of big scale rollouts and large infrastructure projects and new build programs kind of almost came to a halt in 2017. So we as Airedale had to really look and say, well, then how do we iterate our business so we become more relevant? So we found real kind of product market fit for what these clients are now looking for. And more typically now, what we do is smaller scale but very fast-paced rollouts. And we've had to, and we continue to invest in our platform to be able to do that. We did a program with one of our clients before Christmas. That was an 8-week process. That was 200 sites where we had to go in, survey, collect technical data, look at a new menu concept and deliver that within an 8-week program. Now, fortunately, we've got 200 engineers out in the field, but we've brought systems in, we've brought software in, we brought in a software platform from the US that's, I think we're the first in the UK and Europe to put that in. But that's enabled us to iterate our business away from kind of the landscape of large projects into smaller, fast-paced turnaround projects, and partly driven by the change in the market, as I said, partly because of eating. Operators are now looking to get products out the back door. So look, I can understand why people look at it and say it's a challenging market, and in some respects it is. But I also think that there are opportunities that come out of it, and the last 2 years really for us is testament to that.
I would agree with Rob there. I think the the operators that innovate quickly and have a more fast change, flexible menu, adapt to the need to social distance in the kitchen, or both front and back of house, all these challenges that are in place. It just requires more flexibility and more innovation in a very quick timescale. And I think the whole supply chain has to adapt, as Rob has there at Airedale, enabled to deliver that. So.
Oh, okay. Like a lot of industries at the moment, it's fair to say that the catering equipment sector is having to undergo a lot of restructuring, and one of the consequences of that is unfortunately job losses. Rob, I understand that Airedale has had to make some restructuring itself, and there's been some speculation in the market about the extent of that and its impact on jobs. I just wondered what you can tell us about that.
Yeah, look, I think, let me just talk about speculation. I hear, unfortunately, and I don't really understand why it happens. It seems to happen, I've been in other industries, it seems to happen a lot for some reason in this industry. People talk about the rumour mill. I think the rumour mill tends to prove itself to be wrong more times than not, and no change with this. And I think there's a real question about what type of business do you want to be, and the values that you ascribe to as an MD of any business in this marketplace. I don't see anything positive coming out of this type of speculation, because I hear about other businesses. I hear it about ours from time to time, and generally, as I said, it's proven wrong. And even if it's right, I don't understand necessarily who benefits from that. As regards Airedale, I don't think people really realise this, but actually 2/3 of our business now is in service. So we employ 400 people in the group, 300 of which are employed directly within our 2 service operations. So the South Coast that look after the catering, the wear wash, and Flow Right that look after all refrigeration items. And I think some people don't actually realise that. So, and service is, I'll be interested to find out Simon's experience, but service, the insight within service in the current marketplace is that actually service is a really valued offer. And you look at the response from our service businesses and the clients over the last 6 to 8 weeks, and we're back up to, I think, 75%, 85% in Flow Right, and about 70% in South Coast at the moment. So that brings a real kind of resilience to our business, and therefore, have we done any cost cutting in the service businesses? We haven't. We haven't lost one person through any cost cutting exercises. So that's 300 of our 400. Then the other bigger part of the business is Airedale, the projects business. We employ about 80 people in there. We started a process about 3 weeks ago. We completed that at the end of last week, and these are difficult things. These are people's jobs. We made some job cuts. We've reduced the size of the workforce, but if we're talking about how many people have we made redundant in that business, then it's not double figures. It's single-digit numbers. And if you look at the whole, it's less than 5% of the workforce. So the reality is Airedale, when we talk about restructuring, Airedale has been restructuring for the last 7 years, in that we've been pivoting our business away from the projects business into a more resilient service operation. And the vision that we set in 2010 that I joined the business was a 10-year vision to become a national end-to-end platform. So design it, supply it, install it, and then look after it, everything inside the kitchen. And that's what we do. That's what Airedale is about. As a consequence of that, actually 2/3 of our business now is in a much more resilient area, which is in the service area.
Sure. Okay. So do you, looking forward then, given that ratio that you've laid out there and sort of 75% of the headcount in service, as it were, do you see that changing dramatically in the future, or is it likely to continue that way moving forward?
No, I think as I said, that's the investment. Airedale's made a long-term investment. We will continue and are continuing to make long-term investments. We have a plan now for 2030. So, the management team and the board are very much focused on creating a vision for our business for the next 10 years. We are investing now in certain areas. So this business has capacity and will continue to make investments. I think the fact that we've got the service platform is a real strength, and I think we will continue probably to double down in terms of those investments in and around not just service, but all the areas that are associated with managing quite a large and expensive asset base in a food service operation. And I think there are a number of other things. I mean, Rationale have launched, Simon's launched their new product, their kind of
connected cooking.
Yeah, exactly. The cloud product. And look, I think if you look at our market, most of the equipment that comes off the production line are 90% mechanical and 10% data. I think in the next 10 years, it is going to be much more data driven and less mechanical. And I think the businesses that are positioned with that service platform to be able to create real value loops on the back of those changes. And I think we'll be stronger and better businesses because of it.
Yeah, just picking up on that then for you, Simon, and for Rationale, do you think then that the connected cooking, digital management kind of thing is the way forward?
Yes, I do. And I think the trouble is when we talk about connectivity within the kitchen, at the moment, everybody has a different idea of what that means. But for me, I see it developing very quickly from where we are now, where individual units are connected, so you can dial in remotely for service, or you can operate remotely for overnight cooking processes and things like that, and you can access HACCP data. I think it will grow very quickly from that, so that the whole kitchen becomes connected, and you have the whole production process being monitored. So when you take something out of the shelf in the freezer, the system knows that it needs to reorder that produce right through, and it's linked to what the customer's ordering in the restaurant. So the whole flow through. So the equipment becomes, it's all about sustainability. It's making sure that not just using less energy, but the energy is used at the right time within that process. So if the system is connected in such that when somebody orders something in the restaurant, you're going to take that particular produce out of the fridge, the oven comes on at the right time, the fryer switches itself on at the right time to produce that. I mean, that's what I think connectivity will end up as very, very soon. And then you add that to supporting the service piece and what Rob was talking about there, adding value to the operator so that downtime is absolutely minimized. And you can dial in remotely to reset parameters in units and to identify any fault that there may be, even before the operator knows there's a fault. I mean, that's where we're heading, I think.
Yeah, and I think that's
the real added value.
I really do. I think that's the vision for this marketplace. And you look in other industries, and they're already ahead of the catering market. And you talk to clients, and they don't need educating. They're already aware that downtime costs them money. That the footprints of kitchens are shrinking. Therefore, the reliance on individual items of equipment, and in Simon case, the combi oven is a critical piece of kit that people are relying on more and more these days, and they just can't afford to have that not operational. And therefore, service will not be about repairing boxes in the future. It will be about understanding data and creating value from that data.
Yeah, so I mean, one thing that could possibly put a spanner in the works in that is the prevalence of possibly second-hand equipment, or say customers looking to make their equipment last longer than they otherwise would. Do you think that that's going to affect new equipment sales? And Simon, if it does, are you exploring things like special promotions or financing agreements to stimulate purchases of new lines?
Well, obviously we don't sell direct,
Yeah.
so we only have go to market through our deal partners. But we are talking with a leasing company, so that if our dealer wants to explore a leasing option, there's a kind of critical mass there that we can tap into, that is like a three-way partnership between us, the leasing company, and the dealer, to try and help that. I think the important thing is that what will be really important for operators going forward, as we come post-COVID, if you like, and while this lockdown remains in part, I think it's really important will be the return on investment for equipment. Now, obviously, there will be equipment on the second-hand market, entering the second-hand market, perhaps that is to a certain extent newer, but brand new equipment is so much more efficient, is so much more flexible, is multifunctional compared to traditional equipment. So I think it would be, to a certain extent, short-sighted of operators to go the second-hand route and miss out on being able to get that return on investment and that productivity that new equipment will bring. And I think also, that will be recognised. And I think hopefully, we're lobbying government at the moment. I know FEA and CEDA are lobbying government at the moment to bring in some tax incentives for operators to go for energy efficient, sustainable equipment. And I think actually end users will demand more and more, customers will demand more and more that the operators are demonstratively operating a sustainable business, whether that's locally produced and sourced product, or whether it's energy efficient equipment. I think that will become more and more prevalent.
Look, just on that, I think Simon's spot on with that. You're starting to hear narrative in the marketplace using kind of sound bites like double bottom line. It is not any longer of just about making a financial return. It is very much about the values that you ascribe to as a business, and people will make purchasing decisions based on those values, based on what your business and your people in your business really stand for at the end of the day. And I think that whole area is going to, I think that whole area is going to be a really big feature of the food service market in the next 12 or 18 months. I think this double bottom line concept is something that operators and consumers are looking for.
Sure.
Excellent. That sounds about the right time to stop then. That's a good place. But thank you both very much for joining us this week on Market Talk, and everyone else, stay tuned for another one next week. Thanks, guys.